Hi trader, welcome to the weekly review brought to you by Admiral Markets, where I, Chris, take a look at the bounce and break spots in the Forex market. First of all though, be aware of these disclaimers. This video is shown to a global audience, may not be suitable for everyone though. Please take a look at admiralmarketsglobal.com, select your country of residence and contact the appropriate entity for more info on that. Also, please be aware of this risk disclaimer. It states that trading for exchange is considered high risk. Please seek the advice of an independent financial advisor for more information on that. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's start with the euro dollar. This is the 4-hour chart, and basically we saw last week indeed the bounce that we spoke about in the last week's video recap, and the move up to these fibs, which indeed turned out to be the turning spot. So those were two good analysis basically for up and down, and price respecting not only the fib resistance levels but also this trend line here, this resistance trend line, and price turning at that. So we got a three-wave down so far last week on Friday, and you can see if we put a fibs on those particular swing highs, swing lows, one on the entire move down and one on the smaller move down, there is some confluence at those fib levels. For instance, the 38.2 fib and the 61.8 at 112.50, the 50 fib and the 78.6 fib roughly at 112.60 and 112.75. So that is a zone between 112.50 and 112.75 that I think has a lot of resistance and a lot of confluence, and price might be able to make their return. I would expect price here already stopping at the 23.6 fib to start out this week with some kind of perhaps even a bear flag like this, or otherwise some type of correction like this that brings price back to these fibs, and then I would expect a turnaround at the resistance down to the target at 111.60, 111.75. Once that happens, of course, we're at a new bounce spot here. Price has reached the bottom of this new trend line, and then price could either build a zigzag correction back to the top of this triangle basically, or it could build a bear flag. And if it builds a bear flag, then I'm very interested in trading the break of the bear flag for a continuation down to the targets here at 110 basically, and the next support trend line here at the target, the minus 61.8 target as well, at the psychological round level of 110. All right, so from my perspective, at this point, I'm anticipating a correction up to around this level. There could be a bigger head and shoulders here pattern as well, as you can see, indicated by those blue lines, and would expect a turnaround roughly in that zone. Would expect price to re-challenge that triangle. That could be a decision zone, either for move up all the way back up, probably in three waves like this, or if it is a bear flag, the break, and I would expect quite an interesting momentum probably to occur. Now that does not have to happen. It could be choppier than I expect, but I would expect price to go down to 110.60 or 110 eventually. Now once price does that, either it gets back to the top of the triangle, which would be resistance, or breaks the support and goes back to 110.60, we're still in, as you can see, a larger triangle. So ultimately, whether this week the break will happen of the bigger triangle, the break of 110 all the way down to the minus 272 target at around 107.50, or price will break the resistance and break 113.50 to go up to 114.75, 115, that still hangs in the air. It could go both ways in my opinion. Price will have to prove itself which way it wants to break. I'm going to keep an eye on all these breakouts, whether it's the bullish break, which I don't expect at the moment, but it could happen, the bullish break here, or the bearish break here, or the second bearish break. These are potential trades in my opinion. And of course the bullish bounce as well, because ultimately right here at 110.75, because ultimately from a weekly perspective, price is still in that A, B, C, D, E triangle in my opinion, unless price breaks below the bottom of wave B basically. Price is still in the wave D in my opinion, and this potential down move here could all be part of wave D. That's why I do expect a bounce, a three-wave up here probably, for wave E. So something like this could occur, break, break, and then bounce, bounce up for wave E, and then the turn for an impulsive continuation of the downtrend on this euro dollar. All right, we're going to talk about that more on Tuesday. Tomorrow, live trading the Fibonacci levels there, 13th of September. Nanette also takes a look at his weekly FX recap on Monday, of course, evening, looking at the majors. Wednesday evening, he takes also a look at high volatility method. And Thursday together we take a look at basically effective methods to trade supply and demand. Strategy is up back next week, Wednesday. Pound USD 4-hour chart, and you can see the price is bouncing potentially at the Keltner indicator that is part of the Admiral Markets Supreme extra package of indicators, tools, management, alarms. Take a look at that. Check that out, admiralmarkets.com, and go to platforms and check out the MT4 Supreme Edition with tons of extra value for and a live trader account holders, excuse me. So that is definitely something worth checking out. The Keltner here indicating a potential bounce as we speak, and also a 50 fib as well. So price, as we told you, as I said last week, was probably going to bounce to go up to the target. It did. It actually passed a bit above that. What I still expect is price to go up to the minus 61.8 target of the previous fib from this swing high, swing low, and also to go up to basically from this swing high, swing low, a minus 272 target. That confluence is around 130, 135.30 and 135.50. All right, so this could be a bouncing spot, and also the 61.8 could be a bouncing spot at 132 where there's a trend line. A break below that, there could be a breakout, a bearish breakout down to these fibs, and perhaps even further than that, depending on how the price reacts to these deeper fibs. All right, so for the moment, I'm expecting a bullish bounce unless price breaks through those support levels. And on our hourly chart, you can see that price has been already making corrections lower in this channel. So that could either mean price going down to the minus 100 target, making a correction, hitting the channel, and making one more push down. That would be that that would basically be a confluence. That minus 100 target would be a confluence with this 61.8 fib at around 132. So that's one potential scenario here, a continuation, and then I would expect a bigger bounce up after that 132 bounce. The other scenario is that price goes like this, but then breaks above this channel, potentially even with a break pullback continuation. That would make me bullish again, of course, once price breaks above this bearish channel. So ultimately, it could be a bounce right here at this target, at the 50 fib, but it needs to break above the channel, or it's going to correct lower. Then I would expect a bounce at 132, a bounce, and later a break with the target of 135, 135.50 in mind. On a daily chart, excuse me, you can see that that correction would bring us up to here. Ultimately, I think that this could start then to resemble a potential bear flag, for instance, like this. I would expect price to find resistance at this or this fib, and then could make a turnaround back to that bottom of that channel. Weekly chart, price is still fighting and bouncing at this 50 fib. So that seems to be a bouncing spot. Of course, if price were to break below the psychological level of 100, then it's also probably breaking this 50 fib, and there's space to fall down to the 61 point fib at 95, and there will be a continuation of the downtrend channel that we're seeing. However, if price is not breaking through the 50 fib, it could equally just be bouncing at the 50 fib. For a bounce at the 50 fib to really occur, price needs to break this downtrend channel. Now, there's already good signals. There was one already here. Ultimately, that did not break. There was one here, and price seems to be basically making either a descending wedge within this downtrend channel or a reversal. Considering this momentum right here and the pullback, I think that there's a good chance of a break. So what I'm looking for is either a break of this bottom to indicate that this is a descending wedge within the downtrend channel. Great, then there's a breakout to the downside. Potentially, of course, watch out for the break here. You want to monitor that carefully. Wait for perhaps a pullback rather. The alternative, and that's what I expect to be honest, is the breakout to the upside. That could happen after some triangle formation here within this little part right here. Ultimately, though, I expect a break above this channel, and on a 4-hour chart, that would look like this right here. For a march higher, basically a move higher to these targets at 106, 105.50, sorry, 107.25. I would expect price to make some impulse and a bull flag and continue with bull flags and breaks higher. Now, price might still respect this trend line when it gets there, make another hook back here, and bounce basically at this support trend line, and then I would expect eventually the break to the upside. Last but not least, the odd USD is still in a big triangle, still in a big consolidation. From a perspective though, I think that a zigzag up higher seems more likely. So from this perspective, a break of resistance up to the minus 272 target at 81 seems to me the most likely, and then a turnaround for a continuation of the downtrend, I think, is the path of least resistance. So for the moment, though, price is not breaking this resistance and is challenging support. I would expect price to bounce at around 75 or 74 and retest this resistance, and perhaps next time it could and might break. Thanks for watching. Hope to see you in the live webinars of this week. Make sure to take a look at admiralmarkets.com for all the analytics and webinars, of course, and also the MT4 Supreme Edition. You'll find a lot of info and useful updates on that and how you can use it to your benefit. Make sure to take a look at YouTube as well. We got a lot of videos there, and wish you all great trading. Cheers.